From IG in Melbourne. Stan, thanks so much for your time. Interesting moves when we look at the yen and also the Australian dollar overnight. Is this a yield play story?
Yeah, no, absolutely. It certainly seems like the crosses are where most of the moves have been at the moment. Of course, we saw the yen set off yesterday by comments by Haruhiko Kuroda, the new BOJ governor, just coming out and reinforcing his aggressive easing stance going forward. And I think that really encouraged investors who were beginning to feel a little bit bearish on the dollar-yen heading into next week's BOJ meeting. But of course, the dollar-yen had a pretty solid movement as well. We saw it managed to trade around that 94.50 mark into the end of US trade. Of course, the US dollar was given, the US dollar and risk were given a bit of a lift by some better than expected US economic data, which helped trump some of the concerns we've had about the Eurozone for a while now. Of course, those durable goods orders came in sharply better than expected. And we also had that Case-Shiller house price index, which showed the fastest pace of expansion in 6 years. So that really did help sentiment. But it wasn't without some spoils. We had new home sales data and, of course, consumer confidence data disappointing. But this really didn't dampen US investors, who seem to be in a glass half full mood at the moment. Of course, we'll continue to see some to hear some contradictory reports out of the Eurozone, particularly with some leaders suggesting that the Cyprus bailout will be used as a template for future bailouts, while some of the leaders are coming out and saying, no, that's not the case. This is a unique situation and it won't be repeated. And that really does, that split is really shown in the performance of the European indices, with the CAC and the DAX continuing to edge higher overnight, while the IBEX and the MIB continue to decline. So that just shows you that the markets in Europe, where confidence lacks, or the economies where confidence lacks, will continue to struggle as long as this current situation is at play. Of course, we never know what's going to happen in the future, but you can be guaranteed that if the Cyprus bailout works out quite well, then you can only assume that it will be used as a template for future bailouts in the Eurozone. And as a result, there's still a lot of uncertainty dogging the single currency. We did see the euro remain in fairly tight ranges, and that really does show exactly the lack of confidence out there in the euro. Of course, if you look at other risk currencies like the Aussie dollar, which continues to charge higher and came within striking distance of that 105 level against the greenback, then it really does show that we'll probably continue to see the euro sold into strength going forward. But it is interesting to have a look at the Aussie dollar in the crosses, particularly the euro versus the Aussie. I'm pretty sure it's a good shorting opportunity there. And at the same time, we've got the Aussie versus the yen, which continues to charge higher. Came from around 97.1 yesterday and has charged into that 99 level. So it really does look like it will be testing new highs at some stage today. And of course, with Japan in such an easing bias at the moment, and the risk recovery sort of underpinning the Aussie dollar at the moment, then definitely that's one of the crosses or the pairs to look out for today.
Okay, let's also talk Australian market open. We've seen commodity prices push higher overnight. Fairly good lead in from Wall Street. What do you think we'll be looking at today? And also, I guess, keeping in mind that volumes probably aren't going to pop when we've got a public holiday on Friday.
Yeah, look, we're not expecting to shoot the lights out of the open or anything. We're only looking at a 0.2% gain to about 49.60. That's just about 10 points above where we closed yesterday. Now, of course, we've got a bit of a recovery in the iron ore space there, with iron ore prices up about 0.9% to about 137.10. So that will probably see that some of the iron ore miners pop up at the open. We're already expecting a stronger start for BHP, with his ADR pointing to a 0.6% gain to about 33.13. Of course, the resource names have really struggled over the past few weeks, and no one really wants to touch them at the moment. So it seems even at these depressed levels, it's really hard for them to find buyers and to maintain any gains, and it will be hard to see them hold on to these gains as well at the open today. So we'll really have to assess where investors are. Of course, we've heard a lot of analysts continue to reiterate the fact that they think the likes of BHP are still valued into the $40 mark. We've already heard from JP Morgan this morning upgrading Fortescue Metals to an overweight from neutral with a $4.70 target, but the market's just not having it at the moment. Investors aren't happy to buy these iron ore miners even at these depressed levels. So I think that's the space to watch going forward. It was a mixed bag for the commodities space. Gold ticked a little bit lower, but we do expect a general risk recovery in the Australian market early on. We'll really have to see investors' confidence tested today. Of course, a lot of analysts still feel this is just a minor pullback in the middle of a strong long-term uptrend. So we'll probably have to see if these dips will remain supported. At the same time, we've got stocks like Billabong, which will need to be watched heading into the end of this week as their takeover due diligence process sort of grinds on. Of course, yet last week we saw them go through a few problems with that trading halt kicking in, and we'll really have to see if they can maintain those two bidders in place and what sort of deal they can come up with. So there's a little bit to look out for. Not too much on the company news front at the moment, but it should be an interesting session considering the weakness we saw yesterday.
Okay, Stan, thanks very much for your time. Stan Chamu joining us live from IG in Melbourne there. Well, the Prime Minister is leaving her options open when it comes to targeting super. The Gillard government